Hello, thanks for joining me on my next video. Just thought I'd talk about Coles Group. It's a stock that I've talked about quite a number of times on Hot Copper, and I like the chart. I think it's been accumulated. Thought we'd have a quick look at the chart and maybe do some bar by bar analysis. It's a good way to learn and perhaps understand what's going on. Here's the current trading for Coles. This is the day they split out. They traded as a sole entity on the 21st of November last year, and price traded up and down. There was a bit of accumulation here, but nothing substantial at all, nothing to get me interested. Price did try to get away up here, and it was dragged down on this bar, and they tried to keep it down on this bar, they being the composite operator, the market as a whole, no one in particular, or no group in particular. Price did push away, and then here was the 19th of February. This was the day that Coles put their half-yearly report out, and this is where I started getting interested. There was a number of pieces of negative news announced in that report, but some of which was already known by the market, but it was rehashed and made to look bad, to give a bad negative feel, a bad gut feel in the market. And this is the sort of thing Tom Williams would talk about when he was working with the private trading syndicate in America in the 60s, using a bad gut feel to upset the market for your advantage. And I see on the 19th of February, Coles shocker adds to consumer worries. Now, there was some new announcements about restructuring costs because they've just gone out to be a sole entity that wasn't known by the market, but there was other things that were definitely known by the market. And we'll perhaps zoom in, and this was the day of announcement. Price gap down again the next day. Now, to understand a bit more about what's going on, I have another chart which I keep. This is my short chart. Now, it does add another layer of complexity to some extent, but it helps me understand a bit more about what's going on in the market. These red bars here are the daily short volume. The blue bars are normal trading volume, including the shorts. They are relative, so the scale is the same. The yellow is short interest, which are short positions that are currently being held, because sometimes daily shorts are covered same day and they're just used to push the market around a little bit. You can see here, for instance, this bar here corresponds with this higher volume. This is prior to the announcement. The announcement came in here. This bar here, price was starting to get away a little bit, and there was obvious, well, not at the time, but it is obvious now in hindsight, that the market wanted to do some accumulation over here. So they didn't want things getting away too far, so they've used some short positions prior to announcement to bring the price back. And they tried again here without so much success. So there was some underlying demand in the market. This was increased volume over most of the daily shorts, and they really only got it down a short distance before you can see here increased buying came in because the daily shorts were only small and prices gone up in response. So there was underlying demand in the market. The price only came from here down to here, and it drew out increased demand. But here was when Coles announced their half yearly, and you can see the little gap just there, the gap just there. It's the hollow part on these bars, and then there was another gap down the next day, and you can see on announcement they used some daily shorts to give it a bit of a push, and the next day they gave it a bit of a push. But this bar here, let's get rid of some of that. This bar here was when it caught my attention, this looked like buying coming in. I'll flip to the other chart in a second, you'll see why. The daily shorts had reduced considerably, but volume was really quite high still. And the next bar saw increased daily shorts. Now, for me, this was the market buying here, and it was anyone who was going to sell sold here, or already prior to that, but they were out. That didn't leave very many sellers in the market anymore, and price was going to accelerate away. And to stop price racing away too much and keeping it back down here, the markets had to use some daily shorts to quell the demand and keep it back down at this price. And even the next day, it was still reasonable amount of shorts compared to previously, and that's on this bar, to hold it back and quell the demand, get it back under control so price can stay back at this level. So if we flip back to the other chart, you can see here that that spread narrowed considerably compared to these two bars. Remembering that the spread in reality goes from the previous close to the low, so the spread was that much. And on this bar, it's only from here to here. So spread narrowed considerably. Yet volume was almost the same. This was almost certainly buying coming in, and it was pretty much confirmed the next day with an up bar in response. And we saw before that this was a strong up bar that had to be quelled by the market to hold it back from accelerating away before anyone was ready. So this is when I posted on Hot Copper the first time about it. I saw this, and for me, this was going to get interesting. Price had been pushed down on partially known report. A bad gut feel had been placed in the market so that anyone that was nervous could potentially get shaken out of their position. And then two big buying bars come in. Now, it's not really, this is serious buying, but it's not climactic action. It's not bag holding or anything like that, but it's good, strong buying, and that's what we like to see. First thing we need to see across here is marking the high of where price was held back, because this is going to be where an accumulation may occur. Now, the next bar here, it traded within the range of the previous bar, so it's an inside bar. It closed in the top half, and the volume is still fairly high here. So there was probably some buying on that, which in some respects has been confirmed next bar by being up. It was up on lower volume, so it's floated up. There's not very much supply in this market at all. Most of the people who were going to sell, they've sold. It's going to be hard to get supply. This next bar here, it trades within the range of the previous bar. It's an inside bar, it closes high, so that's a strong close, and there's very little volume again, so they're not getting much out of the market. So what can you do but push the market down and see if you can draw out some supply. Now, what may have happened here was others in the market, especially shorter term traders, may have seen the buying coming in here, and they've gotten in hoping the price was going to accelerate away. And when prices dipped and gone backwards, they've just bailed and gone. So on this bar here, I won't be surprised to say that some traders were shaken out here, and the next two bars on reducing volume suggest that there was buying on this bar. if this was all selling, you wouldn't expect the next bar to be up. You would expect the next bar to be down. Now they've gone up on lowering volume, so it's no demand to some respects, but no demand is indicating previous weakness, and we have no previous weakness. We're saying that there was buying here, there was buying here that needed to be quelled, there was buying here. This floated up on a lack of supply. This was floating up on a lack of supply. So this was all positive trading. So this isn't true no demand. This is the professionals in the market not supporting higher prices. They're just standing aside and waiting to see what will happen. And next bar is some sort of shakeout. That's this volume here. It's a little mini shakeout. They got a little increase in volume when they dipped price below the lows of the previous 3 bars. And to some respects, they were probably happy with that. Now, we'll get rid of that and we'll go again. This bar here, it's a bit weird. Now, they don't add up. Normally, you'll find that volume and spread are relative. If you have high volume, you have wide spread. If you have low volume, you have a narrow spread. And we do look for anomalies, but this doesn't make a huge amount of sense. I'm guessing this was probably an off-market transfer of some sort that was reported on this day, and it wasn't, all that volume wasn't traded in the market. And if it was, and I'm wrong, then that was massive buying somehow, some way. A huge amount of stock was released. It was bought. Look how narrow the spread is. It closed in the high, right up near the high of the bar, and the next bar was up. So if it wasn't an off-market transfer reported that day and it did trade on market, well, it was massive buying. But either way, it's certainly not negative. It's positive or neutral. Now the next bar, we'll start again. Next bar, this one. Whoops. Next bar is this one on this volume. Now, to me, this was by the offer. I'll put that line back in over here. This was by the offer, and the first time it happened. When there's no longer stock available, the professional side of the market would prefer if they can just sit there and let the stock come to them when they're accumulating. So on a down bar like this one here, at a certain point they can just buy whatever's in the market and the price comes to them, the stock comes to them. But at a certain point there's no supply left, like here, no more supply. Even when they did a shakeout here, they got no more supply really. This is really quite low, especially compared to what was happening previously. But all the time this is happening, the offer is getting reloaded. There might be people who are willing to sell, but they're saying, I'm not going to sell at this price, but if price goes over 11.50, then I'll sell. So they might put a limit order in, or they might just put their stock in the offer stack at a higher price. So at a certain point, it's very tempting for the market professionals who are looking to accumulate further stock and aren't getting any anymore down at the prices they were at, the prices where the stock was trading. They'll buy the offer. They race the price up. At a certain point they stop, and you often see a poor close, a mid-bar close or a low close sometimes. And from my experience, what happens is price is bought very quickly over a shortish period of time. It might be an hour, it might be a couple of hours, but it's a relatively short amount of time. And then the stock is left to trade by itself, and the close falls back to mid-bar. I would generally say that the stock's fallen under its own weight. And now what that really means is, like in the market, say a stock trades 1 million shares a day. So there's on average, and there's sellers in the market that will, on average, put up, for whatever reason, 1 million shares for sale every day. and in the market there'll be an equal number of buyers on average every day, and they'll be able to buy 1 million shares. And in the perfect world, if the buyers and the sellers met and there's 1 million shares traded every day, price stays exactly the same and doesn't move. Now, if for whatever reason the buyers are a bit late or stand aside for whatever reason, the normal day-to-day supply of 1 million shares will be too much, the weight is too much for the market to bear, and price will drift lower in response. Now, at some point, price will be considered well priced and the buyers will come back, but the market's fallen under its own weight, under the weight of the sellers, but it's only the normal sellers that you would find generally every day. So when I say that price has fallen under its own weight, it means it's come off under the weight of normal average day-to-day selling. It's not increased selling pressure. So in this case here, the market has bought the offer stack and then they've stepped aside. There's no more buyers, or buyers in the market have reduced, and under the regular sellers that are left, price has just fallen back down and it's closed right on that line. Now, you see the next few days, the same thing continued. Those buyers remain standing aside by the looks because volumes dropped or stayed very low. So after buying the offer, they've let it drift lower, and then someone's come in and probably tried to buy the offer again and found there's not very much there yet. So they've had to wait. Now this next bar here, this is this volume here, has traded inside the previous bar, and anyone who had bought in here hoping it was going to race away again, perhaps were caught out and decided they would just sell. This would be short-term traders again. They've sold out. They've got a little bit of stock here. Then there was another bit of buying. This is on an up bar, so it's sort of like buy the offer. There may have been some sort of transfer in there as well because it doesn't quite add up either. But either way, there was a little bit of buying in there. It's on an up bar, and the next bar really saw price float up, probably on a lack of sellers. So on this bar here, what sellers there were bought on this higher volume, and there's no sellers left. Prices come back, prices traded inside the previous bar again, and they did get a little bit of volume out of that one, and now prices broken out above that line. I might just tidy that up. Now this bar here, which corresponds to this volume here, now when price breaks out above an important level like this, you would normally see price explode out. Now the spread's wide, you would say it's exploded, but volume doesn't really suggest that. That suggests it was more like a buy the offer that got a bit out of hand and they couldn't get it back under control again, and price was starting to rise. You can see there was a trend starting to develop here, prices getting higher and higher. So I'm really not thinking this was so much a true breakout where the markup phase is actually going to begin. I'm thinking this is more like a buy the offer because they just want stock and there's not much around at all. The next bar was a little down bar. It traded within the range of the previous bar again as an inside bar. It's a little gap down here, and you can see the response the next day. Price floated up on a lack of supply, so there was probably buying in here, and then prices pushed up again, and really they're not going to easily get it back under this line anymore. There's probably a number of competing parties all trying to get a meaningful amount in their portfolio, and it's obvious that in this period here now there was just no supply left. What was coming out wasn't enough to satisfy the people in the market who wanted stock. So yeah, we'll put those lines back, or at least the important one. Okay, we were up to this bar, I think. on this volume. The price comes back a couple of days. Interestingly, they got increasing supply as price came back, and here was another little inside bar with some extra supply. It's still not high, but it is some. But then when price takes off again and moves higher, it's on reducing volumes here, reducing volumes here, as price pushes out above the next little level. This is really not a breakout still. Interestingly, price remains holding this trend line to some extent, which I originally said on hot copper it was too steep, it wouldn't be maintained, but such is the demand so far that it has been so far, with some sort of little shakeouty thing here, like 2-bar shakeout. Came below the line, tested this line, this breakout line here. Interestingly closed above the high of the low bar, which is always a good thing to see. That's a bullish sign. When price comes down, trades slightly below, catches any little stops underneath there, and then closes back above the high of the down bar, that's usually a positive sign. And if you reverse it upside down, it's a negative sign. But this one's the right way up. Price accelerates away again and pushes away, and it's still maintained that trend line. I don't think it's going to be maintained for much longer. It's going to be difficult. I think the market's hoping that there's going to be some supply up here, so that when price comes up here, they're going to get some more supply, but I'm not so sure. I'm feeling like what supply was trapped up here and was likely to sell had already sold back down here, and that's the reason they got a bit of supply down here, and that's probably not going to have very much left, if any at all. We'll see. It hasn't proven. You can see, look at the volumes here, how low they are recently, and that's trading past this point here. You would have hoped that there was some trapped sellers in there that were going to give their supply away, and they didn't. They sold in here probably, more than likely. Clean it up again. So you can see what's happened so far. It's a pretty clean chart. You won't find such clear trading very often. Usually there's more question marks involved. Might actually just head back. You can see on this short chart here, just the last little bit of trading in here. We've had some increasing daily shorts placed, so I'm wondering if just across here there might be a bit of a want to bring price down. It has gotten away more than I would imagine so far, and it's unlikely it's going to accelerate away at the moment, or the general market is going to support a true breakout above this level here. This level is 1275. That's where a true breakout is going to happen. I know you can say that a breakout would generally happen here, but I'm not convinced it did. I'm feeling like the market had no choice but to continue accumulating like this, because there was no other way to get enough stock to build a meaningful position. So a little increase in daily shorts here suggests to me that there might be some interest in trying to bring it down. Now, whether they'll be successful or not, we'll have to wait and see. But I'm just getting a little inkling that over the last few days they've been absorbing any buyers, any demand in here, perhaps with the thought of giving a little push and seeing if they can get price back a little bit. If we draw those lines in here, perhaps there'll be an opportunity to get price down to test that line. If not, it's really only this line, and gee, that's not very far. So we'll see. Anyway, I think I'm just about done. It's a clean chart. It's been good following it so far. It's been clear to read, and we'll see what happens over the next few weeks and months. I'm anticipating that the next half yearly will probably have some pretty good results, and you'll find that instead of being negative news in the market about coals, it'll be all positive, and that's when the true breakout and markup phase will probably start. And using the fundamentals, they've tidied up the balance sheet, they won't have any more restructuring costs, the dividend will be back, it'll all be good news, and that's when they'll be encouraging the market to buy the stock and help them do the markup phase for them. Okay, thank you. I'll see you on